Vanakkam. Now, today we are going to see another very interesting topic called sole lending versus consortium lending versus multiple lending. Here, a lot of borrowers, they want to get the loan from the banks. But when they approach the bank, the bankers, they say that, no, your limit is huge. So we will not be able to give the loan to you. So some two or three banks you negotiate, then we will have joint disbursement. And few banks, based on the RBI norms, they are giving the loans individually. And this is the thing, this is a very, very important thing, whether the borrower has to approach sole lending method of borrowing or sole borrower method or consortium borrowing or multiple borrowing. So there are a lot of advantages and disadvantages in this. We'll see what is this. Here, what are the types of lending that is there in the banking sector? That is, one is sole banking or lending, sole banking or lending, or consortium banking or lending, and multiple banking or lending. So we will see all this in detail, and highlights we will see in this presentation. And what are the kinds of the loans that bankers they are giving? They are giving loans for the purpose of term loan, that is to create a capital asset. They are giving the loans and working capital loan to meet the day-to-day affairs of the business. They will be in the form of cash credit loan or overdraft loan. And the bankers, they also sanction that the above limits of term loan and working capital loan you can use within India, and sometimes it can be used for the forex loans also. And now we are going to start with the sole lending highlights. That is, a person who approaches a bank and the bank itself, they are giving the loan, and there are no partners to the bank. So sole, that is called as sole lending or sole banking loans. So the loan is being sanctioned by the single bank. Only one bank, that is they are sanctioning the loan, and that is only a single borrower. Or suppose single borrower means that is only one borrower to get the loan from the same only one bank, and he is entitled to get all types of loans. Even the bankers, they are entitled to sanction all types of loans. And they are sanctioning the loan with the exposure limits given by or fixed by Reserve Bank of India. And beyond that, no banker is permitted to give the loan. So this is decided by the loan sanction limit is being decided by the credit committee decision of the sole bankers. So this is very, very important. So here only one bank is there. When a customer approaches the bank, they are sanctioning the loan themselves. There are no partners to the loans to sanction the loans. The partners are covered in the definition of consortium advances and multiple lending advances. So every loan, say the point number 4 is every loan is subject to the exposure given by the Reserve Bank of India. So beyond that, no banker is permitted to give the loan. So all the decisions that is discussed between the borrower and the banker, there is only one single agreement. That agreement is being fixed by the banker, and it has to be accepted by the borrower. There is only one agreement. So that banker, he is preparing the agreement, and the agreement has to be signed by the borrower. And the loan sanction terms and conditions have to be decided by the banker, that is sole lending banker. He has to decide what are the terms and conditions for the loan, and he has to, that is the sole banker has to decide what is the loan amount, what is the interest amount, what is the repayment mode. So everything has to be decided by the sole lending banker. And the customer to use the sole banking. So if any customer has availed any loan from that bank, he has to use only that sole lending bank accounts. And if at all he wants to deal with some other bank to open the current account, he has to go and get the permission from the sole lending bank. Because once a customer availed a loan from the banker, he is not supposed to open a current account with other banks, but everything is subject to RBI norms. In case the loan has become NPA, So the decision of the sole banker, sole lending bank is final. So that means the lending banker has to decide the NPA on his own. So they need not consult the other bankers. And in case if there is any recovery mode, or in case if there is a settlement mode, it has to be decided by the sole lending banker along with the borrower. Both the borrower and the lender, if they decide, they can settle the recovery mode and settlement mode. And here, that individual banker, if he is going on individually, it takes the risk of all types of business of the borrowers, all types of its exposure. So this is the thing I want to say, that there is only one banker. That banker is giving loan to a borrower, and everything is subject to the RBI norms with reference to exposure of the limit for the borrower. That is per borrower, or even for the per sector, say industrial sector, agriculture sector, real estate sector. What is the exposure that is being fixed by the RBI? Here you have to follow. Now we are moving to the another type of lending. That is consortium lending. In consortium lending, it is very, very simple. There is only one borrower. He is being financed by some 2 to 3 banks, or more than 2 banks, 2 or more banks. They are jointly financing the borrower. That type of borrowing is called as consortium banking. There is only one lender, because he might have some very big project, but bankers, they want to take the risk very less. What they will do, they join together and they finance a borrower. So that type of borrowing is called as consortium banking. I am going to see, we are going to see the highlights of the consortium advances. 2 or more banks, they join together and they finance the borrower. So they are financing only the single borrower. He is a very big borrower towards his business or towards a particular project that is going to be run by the borrower. And one bank cannot do the same, because that bank, he doesn't want to take the risk. So we say that, okay, my individual exposure to a particular party is 200 crores. So if the customer wants some 700 crores, so this bank say that my limit is only 200 crores. So some 2 or 3 banks, they have to join together and they have to finance the customer. Here, the loan application has to be made by the applicant to all the banks at the same time. All the banks, they sit together and they decide whether the project is viable or not. Then only they will sanction. So here, if all the banks, if they sit together, then they among the bank. So if some 2 or 3 banks, they join together and they finance a particular customer, all the bankers are called as member bank. And among the members, they choose the leader. So that leader bank concept is there with reference to consortium banking, consortium lending. And individual banker lending exposure has to be decided by the RBI. So if there are some 3 banks or 4 banks, they divide the extent of lending to the customer. So even suppose if there are some 500 crores, if it is it has to be shared by some 4 bankers, they decide either in the form of 125 crores or some 200, 100. In that manner also they can decide. So this is a very, very important thing. The individual exposure will be individual requirement of the loan will be divided by the bankers. Then all the credit committees, all the banks, they sit together and they sanction the loans. So when they sanction the loans, they decide the terms and conditions. So that is, there must be a joint terms and conditions imposed by or fixed by or written by all the banks sit together and they have to do it. Here also they are taking the joint documentation. They are each and every bank, they are taking the individual documentation. Along with that, they are taking all the banks, they put together, they take the joint documentation from the borrower. And here, terms and conditions are not flexible. This is a because when all the banks they sit together and they decide, then all the banks they impose only the particular condition. Suppose if the customer wants any flexibility in the terms and conditions, then this borrower has to convince all the member bank, then only that has to be decided. So it is not flexible. So it is flexible, but it will take time. So even if you want to go for any enhancement of the loan, suppose if once I need another 200 crores or 300 crores, so enhancement will also be delayed because all the consortium bank member banks, they have to sit together and they have to decide whether they can go for the enhancement. And if they want to go for the enhancement, what is the share of the all banks? Everything has to be taken. So this will definitely delay the project. So enhancement in consortium will also make the project a delay. And credit committee, normally all the banks, they have to prepare the process note jointly. And all this joint process note, loan process note has to be circulated among the member banks. And member banks with their addition or deletion, they have to send the same thing to the credit committee, and credit committee after going there, they have to call the meeting and they have to pass the process note. Then after passing the process note, those process notes have to be circulated to the member banks, or all the minutes of the credit committee should also be circulated to the member banks so that the loan limit, loan terms and conditions, everything will be finalized. This is the main highlights of the consortium banking. Apart from that, only terms and conditions are common, but interest rate has to be fixed by the banks individually. Interest rate has to be fixed. So borrowing interest, all the terms and conditions are common. So this is one thing, because interest rate differs from bank to bank. So borrowing interest, terms and conditions are common. Here, because he has got only one property and he has to mortgage the property to all the consortium members, bank lending members. So their mortgage, that is MODT, Memorandum of Deposit or Title Deed, they are saying that it's a joint mortgage in favor of all the banks. So if they've got some 3 or 4 properties, okay. All the properties have to be mortgaged in the names of ABC Bank or in the names of all the consortium lending bank names. So joint mortgage must be there in consortium banking. And in case, another disadvantage. So there are 3 banks. If you are closing one bank account, but they will not release the property because all the 3 banks, they have created a joint mortgage. So even though you are close to one loan account, the property will not be released. So that means the liability will be there for the remaining 2 banks against the loan. So if you at all you want to release the property, you have to apply to the consortium lending bank members, bankers, and they have to decide whether to release the property or not. It is very, very difficult because in consortium lending, the mortgage is in favor of all the banks. Again, you have to incur huge expenditure towards cost of registration. And with reference to consortium lending, one bank NPA will not affect other bank. Suppose in case if there are A, B, say let us take State Bank of India, IOB or Canara Bank, they jointly finance the borrower in the form of consortium lending. In case if any, say, Canara Bank account has become NPA, so the consortium lending, Canara Bank NPA classification will not affect the other 2 banks, State Bank of India and IOB. It's only an example I'm just giving. So one bank NPA will not affect the other banks' classification of the accounts with reference to standard or NPA. And normally, it is the rule that whenever the bankers and the consortium, they are going for inspection, they have to go jointly. Joint inspection must be there in consortium lending. So that also involves huge cost towards inspection charges, and it will be debited only to the account of the borrower. So this is also another minus point, but joint inspection has have to be carried out. Now, we are going to the next method of lending by the bankers, multiple lending. So here the borrower is one, and this borrower has individually approached the ABCD bank. He has got the loan from 5 banks. So he himself decided. So for production, I am getting the loan from one bank. For trading, I am getting the loan from another bank. For another export, I am going to get the loan from another bank. For each and every bank, this borrower is able to give the individual collateral security. Sometimes joint collateral security can also be given to the bankers, and there is no lead bank concept in the multiple banking system. Multiple banking or multiple lending by the banks. That's a single borrower. There are multiple bankers who are ready to finance the borrower, and individual bank decisions. Suppose there are A, B, C. Each and every bank, they are putting their own terms and conditions. They are putting their own interest rate, and they are fixing the repayment position and everything. So individual banks, they have to prepare the individual loan process note and have to sanction themselves, and they need not consult the other banks. So individual bank decision is there with reference to multiple lending, and there is no lead bank concept with reference to multiple lending. And each and every bank, they have to decide the sanction terms and conditions. And in case if any one of the bank account has become NPA, that will not affect the other banks. So just like in consortium lending, individual NPA will not affect the other bank. And sometimes the other bank, though he didn't know that this borrower has got the loan from another bank, but nowadays it is possible because of CIBIL. Because in CIBIL, everything will be reflected. But normally other banks, they don't know whether the borrower has availed the loan or not. Normally, when the banker, they came to know that this borrower has availed loan from other banks, they ask the account statement regularly, because suppose Canara Bank has given a loan and IOB is also has given a loan under multiple lending system, then IOB will ask Canara Bank loan statement, and the Canara Bank will ask IOB loan statement, and they go through the transaction, whether the party is doing the transaction correctly or not. And it is also very easy to get the loan in multiple lending. In multiple lending, it is almost equivalent to sole lending. So it is very easy to get the loan, but individually they have to create the MODT. MODT means memorandum of deposit or title deeds against the collateral security. They have to create the MODT. And in case if one bank account is closed, and for other accounts, you can carry out the transaction. But in consortium, it is not possible. In consortium lending, even though you close one account, your loan remaining amount will be there, and the collateral security will not be released. But with reference to multiple lending, if you close one loan account, that loan of the collateral security against a loan will be released to the borrower. And no objection. Normally nowadays bankers, they started to ask NOC from the other lending banks. Sir, I am also going to release a loan. I am also interested to give the loan to this party. But normally bankers, in order to improve the business, they are not getting the NOC. Now, this is only a practical thing. But according to me, NOC must be obtained in case if the banker has observed that the borrower has already availed the loan from other banks. And timely sanction is possible, because whenever any loan application is being submitted, then the bankers, they sanction the loan in time. And even if they are going for any enhancement or adopt, then the borrower can approach the individual banking. There, based on the decision of the banker, they can get the additional loan or adopt loan. So every bank, they have to do the loan assessment. They need not consult the other bank. These process note need not be disclosed or need not be circulated to other banks in case of multiple lending. And terms and conditions also differ from bank to bank with reference to multiple lending. And if the banks, they thought that if they got the low. I mean, they want to take the risk only to this extent, so they can diversify the liquidity risk. So this is also one of the highlights of multiple lending. And individual inspection has to be carried out, but in consortium it is joint inspection. But with reference to multiple lending, it is individual inspection has to be carried out. And primary secretary, here it is a confusion, because suppose if the customer has availed the cash credit loan from same banks, but under the multiple lending concept, but all the stocks must be should be there at one place. It is very difficult to segregate the stock, which stock belongs to which banks. So this is another technical or this another practical problem. So with reference to multiple lending. And next one is fraudulent opportunities are more in multiple lending. Why is fraudulent opportunities? Means one bank transaction is not known to the other bank. In case if the party has committed any fraud or any willful default in one bank, that is not known to the other bank, because there will not be any communication between the bankers. Nowadays, it is not possible. Nowadays, all the bankers, whenever they felt it was wrong, they are communicating to the other bankers. But according to me, fraudulent opportunities are more in multiple lending. In case if you go for the multiple bank lending system, then if you make frequent inquiries, and this frequent inquiry will have direct impact on CIBIL. So multiple inquiries will definitely affect the CIBIL. And normally bankers, they started to circulate the loan statements at the year end, or some bankers, they circulate the loans on the quarter end. And collateral security, it is individual with reference to individual banking. See, in multiple banking, every bank has to decide what type of collateral security they want. And sometimes some 2 or 3 banks also, they can have a joint holding with reference to collateral security. That is also possible. And now we have to decide which one is beneficial, whether it is a sole banking or consortium banking or multiple banking. According to me, almost sole banking and multiple banking or multiple lending or sole lending are almost one and the same. But consortium, due to the delay in taking the decision, due to the repayment mode, due to the terms and conditions, according to me, it is only according to me, multiple banking concept is the beneficial, because almost multiple lending or sole lending are good or almost one and the same. So consortium, because in consortium there's a lead banker, and lead banker has to decide everything. So everything, for each and everything, you have to go and approach the lead banker, and the lead banker has to convince all the banks. According to me, as per the present situation, multiple lending system is beneficial, because even lot of business executives, business units, they prefer multiple lending instead of the. With this, I'm just say thanks to you, because you have watched my presentation patiently, and thank you very much once again for the patient watching of my presentation. Nandri, Vanakkam.